So it's July 2025, and there is still a real fear for many of overpaying out there. Now, many move-up buyers who are selling their homes in roughly that $650,000 to $750,000 range and trying to move up to the $950,000 to the $1 million range, they're kind of finding some kind of a weird thing happening on our market. In their $650,000 to $750,000 range, there's literally over 700 homes available in that price range. And when they're moving up, there's only about 150 homes available. Now, many agents are gonna say it's a balanced market out there and things are shifting, which they're not wrong. But the inventory gap is creating the worst possible scenario for moving up unless you understand the strategies to navigate it. Now, knowing this info is really half the battle, and you can get the full market report in the description with all the information that you need, but the second half is who you are working with. So if you're trying to figure out and navigate this market, whether it's moving up or moving down or buying your first property, definitely reach out to us. All our contact info is in the description, but let's see what the market is saying for this month. So I want to start with something a little bit different. We're going to dive into the Calgary stats, but let's start a little bit broader. Let's look across our country and bring it down right to Calgary, and that's what our plan is today. So how much will prices rise? So Bank of Canada put a survey out, and it says that Quebec has the highest chance of seeing the most appreciation this year at 5.5%, followed by Atlantic Canada, and then Alberta sitting at 5%. Canada overall is just, I think, about maybe 4.6, and then down to BC looks like maybe a 3.8, 3.9 are their least optimistic areas that could increase this year. What do you think of this? Jump in the comments. I'm not going to respond to it. I just thought this was kind of interesting. And so I'm going to leave that there for you to respond to in the comments. The prairie leads population growth. So, like I just said, if unaffordability is a problem, people were looking for better places to go. That's still happening. So Alberta, basically in Q1, the Canada's annual population growth slowed to 1.2%, but Alberta surged ahead to 2.9%. And these guys, let's say BC, Ontario, Atlantic, they actually fell below 1%. So Alberta still has the most amount of population growing. Now, how does that break out? Now, ATB, I found this in an email. If you don't get the ATB Owl, here's a weird plug. They're not paying for this. I really enjoy their emails, but they have some really great insights. And so in here, the population growth by source for Q1 of 2025, 15.2% came from natural increases, 34.9% came from net interprovincial migration, and international migration was 49%. So this number here, the international one, is probably one that I think is growing more. I don't have the charts here, but if I recall, people are now open to moving to Alberta and Calgary specifically way more than they have otherwise. Usually it's always been Toronto, Vancouver, but now Calgary is open to the international pool as well. And so that's kind of an interesting thing that kind of is happening. And what that's doing is that's also bringing more renters, because a lot of these people aren't able to purchase right away. They might not have the right permits, visas, things like that, or even just the right credit. And so they can't purchase right away. So that's kind of opening up some renters, right? So a lot more renters. Now, housing starts comes into that. So housing starts in Alberta, because we've seen so many more people moving to our country, or to our city and our province, I should say, the 6 month moving average for housing starts. Calgary has had way more housing starts than Edmonton has. And what has happened is Edmonton, when you actually look at some of the charts, I don't have them in here, but Edmonton is really lagging behind their actual number of sales that are happening. They haven't closed that gap, where Calgary really has. And when you start looking at total dwellings under construction in Calgary right now, we're at an all-time high, if I recall. I think it's just over 25,000 dwellings under construction in our city right now. That is insanity. And when you strip those numbers out, you actually get about 10,000 of those are just rentals. 10,000 dwellings under construction are just rentals. Now, if we've got that international migration happening and more people coming to our city, then that makes sense. So when you break that out and you pull out the 10,000 rental units being built, this is what you're going to see. So the orange line is condo and single family dwellings under construction and home sales over 12 months rolling. And Edge Realty Analytics has a bunch of these charts, and he does a fantastic job with this. And so in here, you can see there's this gap between, no, it was a big gap here. Let me just kind of break this out a little bit. So in 2020, we were kind of right where we needed to be. And what ended up happening is the number of sales took off, right? So we ended up having all these sales in 2020. Now, new construction didn't keep up. However, new construction easily has kept pace and sales has come down. So now they've kind of met, and we're at this place where sales are slowing, but new construction is not. And so that is kind of a weird place to be for our city, because we could end up having oversupply in a lot of newer areas. Also inner city areas where they're doing, different types of infills and 4plexes, 8plexes, whatever they are, right? So it's an interesting place that we're kind of looking at. Now, these ones here are all condo and single families. These aren't necessarily any of the rental products that are going on. So this is just homeowners, really, when it comes down to it, is these numbers. And so builders are going to have to really be careful, flippers, anything like that. They're going to have to be really careful on where they're choosing their products, the price points they're choosing their products, where they're flipping their properties, building new properties. Is it oversaturated? Just really, really understanding the markets really intentionally, because it's not a simple game anymore. You can't just buy something, renovate it, flip it, and run, right? You can't just knock something down, build something new, and it's gonna sell. It's not happening that easily anymore. So understanding data is really, really, really important. Now, Calgary overall, we've seen the benchmark price go down to about $586,200, which is down about 4% year over year. So it really is not that bad. We've only seen about a 4% drop so far. And so this could go down further. However, if I zoom in here, if this was year over year, where are we? Right about 20, we're in 25. I was thinking we were in 24. My goodness. So we're talking about the peak of where we were last year and where we are this year. So moving forward, if our prices are dropping, we're probably going to see that year over year percentage slide with it. So if we stayed around 4 to 5% year over year, that our prices still could drop lower because we saw a drop from the high of last year, like that time, right? So all to say, we still have more inventory and we have less sales. So inventory was now sitting at 6,941 properties, and that is shown here in the blue. And the red there is showing the number of sales, which is 2,286 last month, which is down 16% year over year. So one thing that I brought up last time in one of the last market reports, I was really surprised by this, was the fact that, which one is it? Okotoks. This red line has been a higher benchmark price compared to Calgary for quite a while. And I totally missed it. I don't know how I missed it. But here's the other really interesting thing that's happening. So Calgary right now is sitting at $586,000 for its benchmark price. Now Airdrie, let's start at the bottom. Airdrie is down here and they're at $538,000 for their benchmark price. Now, here's where it all kind of starts shifting. Cochrane has actually surpassed Calgary now at $593,000 for its benchmark price. This is kind of, it was very close and it was kind of at par, but it actually has broken away from Calgary. So it's about, what is that? $8,000 more than Calgary right now. And then Okotoks is sitting at $632,000 and Chestermere is sitting at $715,000, all for benchmark prices. So I find this kind of interesting how some of these other towns and areas are really kind of have a lot of momentum in them. Okotoks in general, has low months of inventory and things are moving super fast. So if you're in Okotoks and you need help and you're trying to figure out that market, let us know. But it's definitely a different market at Okotoks than it would be, let's say, in Chestermere or Cochrane right now. So that's kind of what's happening around the city. So now when we look at the actual months of inventory, Calgary has actually jumped up from last month. We were sitting at 2.6. So we were just barely over this 2.5 line. 2.5 is kind of the gateway into the balanced market. Now, the city itself is sitting at 3.04 months of inventory. So we are definitely in a balanced market. But like I was saying before, the intro, when we're talking about moving up, when you're trying to move up to another property and you're selling in one area or price range and buying in another, you need to understand the dynamics of what that is. Price points and areas combined kind of create its own little ecosystem that you have to be able to navigate. And that's where we come in, because we want to pull this data for you and help you figure out how to do that exactly. And so not all agents focus on this, but we do. And we want to do that because data is extremely important. It helps bring clarity to what you are wanting to do. Now, if we look at the actual zones of the city, again, blue is 30 day, red is 90 day. So ideally, we want it to be flat, or we want the blue to be less, meaning that market is kind of staying decent. Now, if you're a buyer and you're buying in one of these areas, you want it to go the other way. You want inventory, the months of inventory, to increase. So you want the blue higher. So for example, the one that's standing out is Northeast. So it went from a 4.68 months of inventory over the last 90 days to the last 30 days being 5 months of inventory. So it's been in a buyer's market the whole time, but it's actually slowing down, meaning it's going to get better for buyers. There's more inventory for you to look at. Look at the East Zone. This is a really big change. These are the only two areas that are essentially at 4 or 5 months or more, meaning they're in buyers markets. Everything else is essentially in a kind of like a balanced market or even in a seller's market, because once you get to about the 2.5 line, which is roughly right about here, that's where you're going to see kind of seller market. So Northwest and the South are still kind of hiding under that benchmark number of 2.5 to get into the balanced market, where everything else, the city center has slowed down. The north has actually sped up. Like, it's kind of all over the place, right? This is flat. This is essentially flat, essentially flat. So all of these zones in different areas are all really, really different. And it's really hard to kind of understand what's going on. And then you can break it down another way with the property types, right? So detached homes are in the red, and it's all really, really tight here. So I'll just tell you the numbers. But detached homes are sitting at 2.6 months of inventory, which is up slightly from 2.3 last month. Semi-detached homes, they're at 2.62 months of inventory, which is up slightly from 2.25. Now, those are the two that have pretty much stayed the same. Townhomes have jumped a lot. Townhomes are now sitting at 3.35, so they're right in the middle in a balanced market, and that was up from 2.5 months last month. Now, apartments, they're at 3.9, essentially 4 months of inventory, up from 3.4. So the townhomes and the apartments have seen a shift into much more of a balanced and a buyer's market, where the semis and the detached homes are still kind of sitting, generally speaking, in that seller's market or really, really low balance market. So the number of new listings that came on the market in Calgary last month was 4,223 properties. That is down from last month at 4,800. So we are going in the right direction. I honestly said, and I really believe, I think we're just gonna follow this line kind of down, but we're gonna be on the higher end. And that's probably very, very realistic. When we look at number of sales per month, this actually it's kind of, again, I did think it was going to stay. And if we go back in the other video, but I think I was saying it's going to kind of stay right in this middle. We're obviously not going to be dropping into the bottom because there's still demand in our city. You have to remember when you're looking across the country, when you look at just our city alone, yes, it's overpriced. It is insane compared to what it used to be, all of these things. But when you look at a big scale, when you get a big picture across our country and the reasons that people are still moving here, I mean, we had the largest growing population, and I did see somewhere, and I did not get the stat, but Calgary was still like the fastest growing area in the world or something like that. Total fact check me on that. If someone can find it, the article or something, put it in the comments. But I remember seeing something like that over the last couple of weeks, and I was really, really surprised by that. That Calgary itself is really a fast growing city still. Even in the current economic situations, all the things that are happening, we're still doing that. And so this is the reason that we're still seeing the market kind of being okay compared to some of the other cities. And when you look at the inventory, it just went up maybe about 200 homes. That's it compared to last month. And remember, I was saying last couple months that if we end up seeing somewhere in this 7,000 to even up to this 9,000 range, that's gonna be okay. It's not gonna just tip our market into this crazy buyer's market. It's gonna keep us a little bit more stable. Prices are gonna be more stable in that inventory range as well. So don't be fearful and just read these headlines or what people are saying. Really use numbers and information to help bring some clarity to what you're wanting to do. And so if we sit there, you gotta remember, the one video I did somewhere, I ended up talking about back in 2008 and 2009, after kind of that crisis that happened, Calgary actually had nearly 15,000 listings. It's not even close. We're not even close to that. Calgary had 15,000 listings. And at that time, I don't know, I'm guessing, but I would assume that our population was probably like 1 million, 1.1. Now we're 1.6. So that 15,000, if you just add rough, 20, 30%, I mean, it could be at 19, 18,000. So we are really, really low compared to what it could be if we were in a really bad situation. So context is everything, and it really, really helps. Now, this month, all the areas went down. Last month, we only had one area increase, but every single area has decreased. And truth be told, the Northeast and the East have got hit the most, 5 or 6% drops year over year, where the West only dropped about 2%. North also dropped 5.8%. Southeast was 3, South was 1.7, City Center was 3.5, and Northwest was 3.2. So every area in the city, all the zones in their kind of overall benchmark-ish prices have all dropped year over year. But what about price ranges? I mean, I told you, we got a lot of stats we're going through. So if you want all this information in a written form and all the charts, everything in there, get the monthly market report in the description. It is there. And while you're going down there to click and grab that, make sure you're subscribed too. Subscribe, like the video, all the things, right? If this is helpful, these price ranges, this is very, very interesting. And I'm going to quickly kind of give a little mini analysis here. But as you can see, these ones here are in a buyer's market. I'm going to do green for balance. So you've got here up to here in a balance market. We go back into kind of a seller's market, roughly sellers, and then it flips again into balanced, and then we go back to sellers, and then we go back to balanced market, and then we got this weird little, right at $1 million, it's in a seller's market, and then it kind of flip-flops all the way through here, and oh, interesting. 1.8 to 1.9 is sitting, oops, I meant to do blue there, is sitting at 2.14. And then everything else, and then I'll do pink, everything else for sure, pretty much everything else, right? So this is kind of what it's looking at. Blue is in a seller's market, green is a balanced market, and pink is in a buyer's market. So as you can see, when you're looking across all of the price points of our city, we're still really, really balanced in a lot of ways, balanced or a seller's market. I mean, a lot of these price ranges, to kind of give some context to this, I mean, these are going to be kind of your starter homes, your townhomes, all of those types of products between $450 and $750. And then when you get up above $750, for sure, it's all your detached homes. You might have some semis in here too, in that $450 to $750 range. But once you get over $750, you're kind of in your detached, your higher end infills or higher end attached infills, the semis, and then so on and so forth upwards. But right here, this green section in this little area between your 250 to 450, that's a lot of apartments, right? That's a lot of apartments. And a lot of those, you can see like just how much inventory is sitting there and how many sales or less sales are there compared to this section versus this section. So it's just a really interesting way of kind of breaking down kind of what are the 90-day months of inventory looking like compared to the actives and the solds. But it gives you an idea that there are pockets of products that are doing better than others. And again, you can't just say the city is doing this, because that's not the case. And so one thing we've been tracking for probably, goodness, a year, maybe not quite a year, maybe about 10 months, is the percentage of off-market properties, right? What is going off the market. And that's the wrong chart because this is only last month, like May. The June number was actually sitting at about 73%. It went up this much, with sales kind of sitting here and inventory jumping up a little bit. Just kind of think this is your blue line, this is your orange line, and then this red line went up here. Now, here's what's wild about that. So what that means is how many homes went off the market, withdrawn, terminated, expired. They didn't sell. They might have gone on the market back on and tried to sell again, but let's just say they went off the market, typically because it was overpriced. And that's 99% of the time. It's a price or preparation. Either you got a crappy home and it didn't sell, or you overpriced it and it didn't sell. Like, it's just literally one of those things. But if it's not a great home and it didn't sell, it's because it's not tied to the right price. So at the end of the day, it comes down to price. Okay. And so if you're taking it off the market because it's not selling, it's typically coming down to price. And so overpriced homes coming off the market. The last time we saw a number that was close to this, we were in Christmas times. Like, this is November and December of 2024. In June of last year, it was only 24%. So there was a lot of property still selling. So what this says to me, and I have this next chart is really explains a lot of things, is that there's a lot of homes that are just sitting. Sellers being stubborn with their prices, or agents not understandingly giving information on what is actually happening in the market so sellers can make educated choices. That's what we do. And that's such an important thing when you're actually selling a property, is to update with what's happening on the market. Now, 158%. So let's break down these numbers. There was 225 active properties in the Northeast. There's 210 properties that sold last month in the Northeast, and there was 333 homes that went off the market in the Northeast. That is wild. That is a lot. And then the zone, the East, and the numbers are all kind of jumbled in there, but it was 125%. So between the Northeast and the East, this is really skewing our stats, but that doesn't excuse the other areas, because in city center, where there's a lot of condos, it was at 77%. So again, a lot of condos are overpricing. A lot of these ones in the Northeast and East zones could be rentals, flips, whatever they are as well, right? Or just, again, they went up really quick and now they're coming down and people are overpriced. Now, if you look at the Southeast, it had 71%. The West was sitting at 65%. The North was 73%. A lot of these, and again, I don't have it broken down based on property types. We could, but at the end of the day, there's a lot of homes that are sitting on the market, just wishing that they would sell for the prices they would have sold in the past, and sellers just kind of being a little stubborn. Buyers do have a little bit more upper hand, and buyers have a lot of an upper hand in some price points in some areas and whatever else. But this is very, very interesting. And that Northeast number, seeing 158% is wild. Again, we haven't been tracking this very long, but that is insane. That 333 properties in the Northeast went off the market when there's only 210 sales and 225 actives. That is a crazy number. So if you want more great stats, get our market update, and we'll see you up in this video because we've got lots to share. Need anything, let us know.